Good morning to all traders and welcome to another Markets and Waves, the 4th of October today. Certainly an interesting session last week, and we are back again Monday with another update. Today we're going to have a quick look on the US index, euro, dollar, pound, dollar, gold, and also the S&P. I think those are the important ones to talk about. DXY looks like it's done, okay? It looks like it's done, but then there is some sort of bias that I need to be honest with when we look at euro, dollar, and pound dollar. Although for now the current structure tells us that this is the high, there might be another attempt up based on the rest of the basket, which is euro and pound mainly. So don't forget that we have put a level at 94.72 here. This is the previous wave 4, okay, and it's not really necessary that we do not move above that, right? It's not a must. It's not like it will invalidate an impulse or something. It's just that is a guideline for a potential top, okay. Now one scenario is this. The other scenario is that internally we have another structure, okay, and this is more I think I tend more to the second. It's not like I just started with a different scenario here, but I think we're gonna get something like this, okay. I think we've got 1 and 2, I've got 3, and we're gonna get 4 and then 5, and from there we're gonna get another 4 and another 5. And as I said, I see that being the case, well, because otherwise we'll have to assume that this is 1, 2, 3, 4, and 5, which, I mean, okay, it looks a bit okay, but you know, that definitely looks more like of a 1 rather than part of anything else, okay, and that looks like a 2, and that 4 looks like it's taking the similar sort of longevity, duration as wave 2, which is exactly what we would prefer to see. And then from there, you know, this might be just a zigzag over here, might get up and then do some sort of triangle maybe, since we've had an ABC over here, and then move higher. So we might stay here in this area for a while on the DXY, okay. So on euro dollar now, as I said before, I was looking, well, I mean, technically speaking, if we look at the channel, it looks like we're done here, okay. Our wave either 2 or B, because that can be a case where, you know, we have a low. However, if we look at the structure from up here, okay, it looks like this is potentially like, this is something like a wave 1 and a wave 2, right? And then one would say that this is 3, 4, and 5, indeed. However, then we've got 1 and 2 and 3 and 4 here. This is what it looks like to me, okay? So it looks like we're in the 4th wave of the 5th wave of C, okay. So correction, and then 1 more down, and from there we move all the way up. Obviously the real sort of, not real, but high probability of a sort of signal would be the break outside this channel. In the shorter term though, we have another channel that we can draw over here, and that would be this, okay. So if we get here and then down, you know, most likely to get down to around 115 and then continue up. If we re-enter that territory and we stay above it, inside it, and then suddenly break the top, then most likely to move up, and that is the end, which means we've got 1, 2, 3, 4, and 5. But I just don't like this structure over here for a reversal structure, okay. Now in GBPUSD, we're also looking at this becoming a wave 4 down. It's a very similar case with euro. It's just looking a bit more bullish because it had a better bounce at the bottom. So this is, looks like to me, this is 1 and 2, 3 and 4. Okay, we're in a different sort of point on the downside leg, but still correcting. And then I think we're gonna get another leg down, perhaps get out that channel bottom and then move all the way up. What we can do, obviously, always is use our FIBO over here, since we've got 1 and 2 and 3 and 4. you know, the 132 is a good level in this case. In a different case, and if we assume that our wave 4 is in here, which may be not the case, we can use the 38.2, the 61.8 to find levels. So 133.90 and 132.74. As long as we are below this median line on the channel, though, we remain more bearish than we remain bullish. Now, if you ask me, can we be done here? Well, 1, 2, 3, 4, and 5 is also a case. Okay. So yes, we could be done, and that, to be fair, looks a bit more bullish than euro dollar because there's no correction over here. That looks like 1, 2, and you know 3, 4, and 5 might be the case for 1, then 2, 3, 4, and 5, or it might just be an ABC, and then we're gonna get another leg down. That's gonna be a W, X, and Y. But obviously there is still a lot of room for us to come and talk about alternatives that, you know, they're not near happening. Now on gold. Last time I showed you my alternative, which looked for more downside. Now this time I'm going back to my main, and to be honest, I have made a change here. This change takes into account this actually as a truncation, okay? Because last time we're looking at W, X, Y, X, and Z ending down here. We're looking at intermediate 1, intermediate 2, and then 1, 2, and continuation up. However, now the issue is that, you know, we stayed around this area for a while, and it's like a 99% correction as well. So more likely to be part of the correction rather than anything else, because it looks, you know, that looks like, you know, it looks like it could be 1, 2, 3, 4, and 5, but more likely an ABC over here as well. Okay, so that's what I'm looking. With that said, now there is two scenarios in the short term. One is that this is done there. This is 1, 2, 3, 4, and 5 for A, and this is B, and this is 1, 2, 3, 4, 5 for C. Wave 2 is done. 1, 2, 3, 4, 5 for 1. Then we get 2, 3, 4, and 5 and continue all the way up. Or since this looks like an ABC, that can be a W, that can be an X, and that can be W, another ABC over here. But I'm looking at this, you know, as an ending diagonal over here. So that would be A and B, which means there's no space to do the diagonal here. So this is a structure that we need to wait for a bit for the market to give us the right pattern, okay? Because so far that can look a bit confusing, okay? Although we've got this clear leg down and this clear leg down, that can be seen even, you know, if one might ask, you know, A, B, and C over here, and that can be all the diagonal. So we need to see, we need to wait and see how markets are going to respond. Now, if we stay, or maybe I would say, because we have done 5 waves ups just now, if we go back to 1737 or say in bounds there, then very good likelihood to continue all the way up. But if not, and we break below, obviously the chances of continuing lower are going to increase. That is not going to invalidate the main scenario, which is what you see currently. It just means that most likely it's going to be a case where this is W, this is X, and that's going to be a Y. Okay, and we're going to go lower down, but we do not want to go below the 1700. It's around 85% correction. Okay, anything below that would again have to reassess the scenario based on the structure that we're going to get to the downside, of course, and reassess what the potential alternatives can be. Now, the S&P, we talked about a potential move to the downside last time. We changed again. We have to go with what the data show us, the guys. So a lot of changes can be expected. Okay. Now over here, I drew this channel the other day, and I said as long as we remain below that channel, we are bearish. That is still the case. Okay. We've got a couple of gaps to take into account over here, but I think we're gonna move down first rather than up. So with that said, that looks like an ABC rather than M1, 2, 3, 5. So that looks like, again, as wave A, because we have 5 waves down. We might get the B, and then we might get C down here around 41.87, and then continue up. that looks something that it's possible to me, especially as long as we remain below this trend line. So this trend line is the sort of make it or break it line for me. The first one, let's say. The second one will be this sort of resistance down here, and then the resistance at the top. Okay, oops, excuse me. And the resistance at the top, the 44.87. Because once the 44.87 breaks, then we have again more probabilities to move higher up. And if we do that and we break above the 45.46, then we'll have to go back to our original scenario that this is 3 and 4 and 5 is gonna get and higher. Okay, so guys, this is gonna be all for the day. I hope this is helpful at the beginning of this week already. Thank you very much for watching. As always, do not forget you can leave your comments in our YouTube section. I will get back to you as soon as I can. Thank you again, and we'll speak again soon.